Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hi, everybody. Welcome to Mortgage on My Mind. I'm Natalie Salins. Today, we are here with the exciting Abe Hakawati. He is a licensed mortgage loan officer affiliated with Loan Factory and licensed in both California and Texas. He assists borrowers with a wide range of mortgage products, including conventional loans, jumbo mortgages, HELOCs, reverse mortgages, and other customized financing solutions, which we're going to chat about today. Abe partners with myloandesk.com, which is a digital mortgage platform offering conventional portfolio and commercial programs designed for borrowers with unique income, like non-QM-ish, I'm guessing, or property scenarios that may not meet traditional bank guidelines. So welcome, Abe. Thank you so much for joining the show today.
Pleasure. Thank you for having me.
Absolutely. So when we were chatting before I pressed record, you were telling me that you're excited this year about the 2026 available programs for first-time buyers. And I would love to give some information to our listeners about that. So give us some insight on that. What programs do you think are worth noting? I know the Dream program here in LA is back out, which it wasn't at all in 2025. But tell us a little bit about what you're excited about. What programs are out there right now?
So in Florida, for example, which is my hometown, we have a program. It's an FHA lookalike. It's called Earned Equity Program, and it's actually sponsored by an Indian tribe called Tull River, Tull River tribe. And what they do is they get an FHA loan and they sponsor the buyer, where there would be a contract between the tribe and the buyer as an owner, and they technically rent the property to the owner, and they accept a lot of borrowers that typically would not fit into an FHA or even a non-QM program. And they allow them to come into $500,000 property, $1 million they actually go up to 3 millions with 3% down. So you'd come in, you would be actually under an FHA rule in terms of underwriting, but it's more of an expanded guideline. They allow bankruptcies 1 day old. They allow 60 to 65% DTI. You can have a ton of debts.
And DTI for our listeners out there means debt to income ratio. So that means that's how we qualify you, which is pretty darn high. Normally, for standard loans, you only go to 45 or 50. So that's crazy.
So they allow different type of incomes, undocumented, as we know in the industry. You would have to have some historical background. You'd have to have some 1099s, W-2s, or even bank statements. But most of these programs, like a bank statement loan or a 1099, you'd have to have at least a year old, and then there was a specific underwriting guidelines that only a certain amount of that could be qualified. With this program, they take everything. If your son is actually selling lemonade outside and you're getting some income, and you could show that deposit in the bank, they will actually add it to your income. So it's easy to qualify.
How would you find that? On a bank statement, you mean?
In terms of, I'm sorry?
How would you qualify that income, which is just cash, right? Would you find it on a bank statement?
It's just cash coming into the family, right? Exactly. So it's income coming in total deposits into your bank account.
Got it. Okay.
So they just look at your deposits. and just a traditional underwriting again. They would use that and calculate your DTI. And as long as you are below 65, I think it was, and you'll qualify for the loan. 3.5% down. Obviously, there's a management fee that they would charge, and then there's also mortgage insurance for the FHA program that they get that gets charged on the loan. But it's actually designed to be a homeowner rather than a renter, which what really the administration is pushing forward. 2026, it's all about being a homeowner. And this program makes it easy for really anybody to qualify.
Amazing, amazing. And the interest rates, it sounds like a hard money in my opinion, but the
I
interest
mean,
is
it's
much
straight
lower
up.
than a hard money.
Yeah, the last loan that we did was at 7.5 on a 30-year fix with no prepayment penalty. It's
That's
definitely
great.
below hard money.
For sure. That's
Yeah.
great.
And it's you become a homeowner. There's a huge difference between a renter and a homeowner. The community grows a lot quicker with home ownerships. Your small businesses around home communities will grow and flourish. When you are a homeowner, you're going to stay in your community a lot longer. Your kids are going to go to that school. You're going to go to the restaurants that in your neighborhood. Versus
Right.
a renter, you're always on the clock. You have your lease is going to end at the end of the year and you're going to have to renegotiate it. You're actually out facing inflation and your rent might go up. There is
Right.
nothing like being a homeowner. I don't know how else I could explain this, but I really urge every renter to reach out to their realtor, to their mortgage people, and try to become a homeowner. This is the year that it's easier than ever to become a homeowner.
Interesting. And so you're saying that because of this program, which is a great program for sure. Does it have zip code limitations or anything
Yes,
like
it does.
that?
You need to show ability to repay. That's the basic. You can't just have sporadic income where your income is unpredictable. So you need to
Mhm.
show some stability in your income of some sort. You need to show your credit stability also. You can't just, they're not going to let you in with open collections. They're not going to let you in with open lates on your credit
Got
report.
it. Okay, so credit
So
needs to be somewhat good.
you'd have, yes, this particular client of mine, her score was fine, but from what I understand from underwriting, it's really, I haven't done a lot of deals on those. It's just pretty new. You need to show respect to your credit report. You need to show that you have fulfilled your obligation. You can't leave open collections. You can't leave
Sure.
car payments that you are behind on, for example. So that's where the limitation would be. But other than that, show stability of income, which I'm sure any natural person that is ready to buy a home, they definitely have been stabilized on their income, and they should be able to qualify. In the past, again, but I think the majority of the people, the problem that they have that their historical income probably had fluctuated up and down, and they've probably been on the self-employment side, and they don't report most of their income. With this program, you don't really need to show your tax returns. As long as you could show the deposit in your bank, you'll qualify. On a typical bank statement loan, to qualify, you have to come up with at least 10% plus closing cost. With this
Mm,
program, 3.5%, and the seller can contribute up to 6% for your closing costs. So technically, with 3.5%, no tax returns, no 1099s, show me the income,
But
and you're in.
and are they providing MI or is there no MI?
Yes, they do. It's an FHA copy. So yes, there is MI on it. There's
There is.
FHA on it.
Okay. FHA
And if you
MI.
stay in a
Interesting.
program, if you stay in a program for 6 months, then you could, that's 12 months for a streamline refinance. You don't even need to show income at that point. I don't know if you're familiar with a streamline FHA, where you don't, you can
Sure.
come in.
Yeah.
Okay.
No
And
appraisal, nothing. Yeah.
on 6 months, you can actually assume the loan from the tribe and you can move on. If your income have stabilized in that 6 months and now you can refinance in your name, the tribe will release the equity to you and you move on and you're now the full homeowner of that
Wow.
property.
Amazing. And what other so I obviously this one is very exciting and different for sure. Clicked a button. What else are you seeing that you think is worth noting for 2026 and for first time?
The bank statement loans, I've seen them get accepted at 620 score, which is unheard of. Before it used to be at 660 or better.
Hmm.
Another self-employed people can come in if they have enough 10% deposits, 10% down rather, with a low score. Now the door is actually open for them with if they have enough deposits actually, or if they have enough income coming in, that's available. And then FHA, as I understand, now they allow up to 50% debt to income ratio.
FHA?
FHA. They,
FHA allows up to 57.
57. Oh,
57. Yeah. Oh,
so
but 47 HTI. So for those of you who don't know what that means, HTI is the front end ratio. So how we qualify you is we take your debts monthly that we find on a credit report and the housing payment, the new payment, the mortgage, the taxes, the insurance, and the mortgage insurance if it is FHA. And we add all the debts up on the file, we divide it by your income. That's how we come to a back end ratio, which with FHA is 57. On FHA, though, which gets a little bit tricky, sometimes we don't get an approval on FHA because they keep a front end ratio, which is your housing ratio, at 47. And sometimes I need the front end ratio to go higher. If they don't have a lot of debts and all of the debt is proposed to be their home, their housing debt, and I need that to go to 49, then we have to switch it back into conventional because conventional will go 49, 49. But FHA goes 47, 57. So if you have lots of debt, FHA is perfect for that because they allow you to really qualify the
push
home
back the,
payment up to 47 and then carry a bunch of debt on top of your house payment. Yeah.
yeah,
It's great. I love FHA for that.
yeah.
Yeah.
So there's no excuse. Own a home. Go out,
Uh-huh.
shop, get yourself a key to that beautiful home that you always wanted.
Oh,
That's
I love that. Absolutely. And tell me a little bit about your company.
So we are a non-traditional lender or mortgage broker that we focus
Okay.
on non-traditional underwriting, non-QM, non-qualified mortgages. We work a lot with self-employed people. We work a lot with people that had problem in their credits in the past. And are we still on? Okay.
Yes, yes.
Okay.
Fit in with
And
the program.
we also work on commercial properties. So we really do a mix of between residential and commercial properties. We work with foreign nationals, international buyers that come without tax returns or without credit at all, which is actually prevalent in Miami. We have a lot of foreign international buyers that if they have the 25% down, we could do a 30-year mortgage for them.
Got it. Interesting. And so you're a broker. So you broker so that the audience understands the difference. Like I work for a mortgage bank. We fund most everything in-house, even though I can broker out. So for you, you broker everything out.
We have our own lines, which is conventional programs, but I really don't do a lot of conventionals myself. Most of my clientele are on the non-QM products,
Or
which are all
non-QM
brokered
products.
loans. But I do
And then
have
how
access
brokered.
to our banking lines.
And I'm just curious, on a 620 FICO score for bank statement only, is it 10% down on 620 or with 620 you need like 20% minimum?
No, we could still do a 10%, but your rate would be higher, obviously. Your rate would probably be between
Eight.
8 and 9 to even 9.5 sometimes.
Yeah, of course, with credit that low. Yeah, I find that the non-QM, the bank statement only now, are so amazing for people where they don't, even if they have the money and they can file the tax return to show the income, it doesn't even make sense for them to do because why would they pay such a huge tax liability when if they were planning to do 20 or 25% down, the rates are so good now on bank statement only. They're so close to what a standard rate is that even if it's $100 more a month, it makes much more sense to go with a bank statement only loan than to pay a potentially 50 or $60,000 tax fee,
Absolutely.
you know?
Absolutely. Absolutely. Us, the professional, we see that on both sides. A home buyer would think, or a general thought that, yeah, if I get a conventional loan, that means I'm actually in the best rate possible. But you really need to take a look at the entire picture. It's money in and money out. And even if you are lower on the rate and you had to spend so much money to get that rate, then it's useless, I think, in my mind.
For sure. For sure. Absolutely. All right, wonderful. Thank you so much for joining us today and being on and sharing this great new program that I haven't even heard of. It's exciting. I know you emailed it to me. I can't wait to read more about it and see what is possibly available on our site out here. But super cool. And thank you for being on and sharing your information.
Thank you for having me. This has been a pleasure. Thank you so much. And all the power to you and to your show. Keep it going.
Thank you. You too. If
And
you
I'll get
have,
that
what?
over to you too.
Oh, yes. Thank you. Please. If you have any questions for Abe, all of his information is in the below. And we will see you next time. Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.